Is it still considered a straddle if your strikes are $1 apart? It's a strangle. Straddle is the same. I'm strangled tonight. 40-50, 40-25. Unfortunately. I don't like buying 40-50s, but I don't know. Maybe I'll get a chance to get out of them. We're really at the top, the tippy top of the long side positioning here. So I should probably buy more puts, but I already have some. So I'm just gonna hold the ones I've got. That's what you said last night. Then 50 BPS. Yeah, I mean, but at least yesterday I got to enter the lower priced call, right? If I'm up in PM, close the calls at open. I mean, unless you can close them in the pre-market. Sometimes I scale back my like straddles going into like big data. Like if one side is obscenely profitable, I'll like scale it back. Ding ding, day's done. So no, GME's still pretty flat, which isn't really bearish or bullish. Still, so far, still no reversal in the liquidity trend. Liquidity is still flat. VIX kind of bounced back from its low of 1888 today, with a little bit of put positioning into close, but we stayed strong at the 40-50 level, with futures just at 40-80. If this is the high for futures, they're falling just a bit low of yesterday's high, or today's earlier high, I guess, this morning, where I think we peaked just above this standard deviation bound for the VWAP. We're still kind of at that critical juncture here. If this test continues to break up, obviously the market's trending more bullish, and that's, you know, if that happens, like light PCE tomorrow, then, you know, 4200's kind of high, but not out of the question there. I think we'll need to see a lot of repositioning for that to happen. Given that most of this trend is bearish, the odds are that we see a breakdown out of this and fall lower over the coming weeks as we approach what is likely to continue to be warm CPI and PPI data, and SLD, which is also coming up shortly. Short positioning for like 421 is still coming in pretty heavy. The majority of participants are still betting on downside on the long term, even though we have, you know, a lot of bullishness in the short term. PCA will be out tomorrow morning before market open, and probably will determine most of our day tomorrow, even though the effect of it generally doesn't carry over for a long period of time, unless it comes in really hot. Large put spike, end of day on SPY. Yeah, there's a lot of put buying going on today. Shitloads of it. All throughout the early part of the day and a little bit into the end. I'm aware. Yeah, JPM collar. Well, JPM's collar, yeah, probably will roll tomorrow. Hopefully just once, but you can see it roll multiple times sometimes. But yeah, that'll probably drive a lot of volatility. I think the last few times they rolled the collar, it drove a shitload of downside movement. And then once the collar was in place, it snapped back. And then I think over like the next few days, we had several like 100 BPS moves up and down before it finally stabilized to the upside. But the macro environment was looking a lot better back then. We were moving into the beginning of January, where everything started to look really bullish for a little while. The last collar roll was the end of December. Once the collars rolled out, it has very little effect on the like shorter dated price action, because it's rolled out of the money on either side, right? Look at Bobby. I don't want to. I don't care about it.